Okay, thank you very much, and thank you to the thinning Friday afternoon crowd for hanging in there. So I appreciate your attention. I'll be as brief as I possibly can here on Friday afternoon because the beer is about to be served. So moving forward, this is just a shot of our primary focus, which is called the Candelaria past-producing silver mine in Nevada. I'll be spending some time on this recently acquired asset. The ubiquitous forward-looking statement, as there will be some forward-looking statements in this presentation. Essentially, what is the company? Relatively new company, just started trading in mid-2016. We essentially have now 4 projects. 3 were originally acquired from First Mining Finance, which is a company headed by Keith Neumeyer, which is also affiliated with First Majestic. They're key investors in our company. I'll explain that. We also acquired the rights to earn 100% interest in the Candelaria silver mine from Silver Standard, and that is located in Nevada. We've got a large historic resource at Candelaria and smaller resources on our Mexican silver projects. Got a good growth strategy. I'll talk about that. And good management team, and we do have good support from our key investors. Price history essentially started in 2016. We came out of the gate very strong, but mind you, mid-2016 were heady days for silver. It was around $23, $24 an ounce, heading to $100, so everybody said. Didn't quite turn out that way, and like all the other companies, we settled down and are now trading in the 25 to 30 cent range. But we haven't been resting on our non-laurels, shall we say. We have been expanding the asset base to the company. Originally, about a month after starting to trade, we acquired the 3 Mexican silver projects from First Mining Finance. We gave them 6 million shares of the company for those assets, making them our largest single shareholder. We did a $2.5 million financing, and we did a 3-for-1 forward stock split, thus increasing the number of shares out and taking our share price back down to the 30-some cent level. Going forward, in January of 2017, we entered into a 3-year option agreement with Silver Standard on the Candelaria silver mine. Why did we do an option agreement? Because it was a past producer, we had some concerns about potential environmental liabilities, and we wanted time to assess that. So far, it has been a very pleasant experience. We haven't discovered any unnecessary risks to date. So we move forward with Candelaria. We've made the second option payment in January of this year, and we're looking forward to continuing to advance the project. We actually drilled the old heaps because it was leached by Kinross in the 1990s, and we drilled the old heaps in December, and we've started analysis and metallurgical testing on those heaps with the aim of looking at potentially recovering silver from the old heaps in the not too distant future. This is the management and director team. I won't go through it. If you're interested in the company, you can certainly look at it or come and speak with me. My background is for 13 and a half years. I led a company called Entre Gold. Its claim to fame was it had acquired a large ground position surrounding then Ivanhoe Mines Oyu Tolgoi project in Mongolia. I retired in 2015 after securing a 20% carried interest in the richest portion of Oyu Tolgoi in joint venture with Rio Tinto. It's slated for development in 2022-2023. But my job was done. I retired. I was contacted by these people. I found the concept interesting, and that's why I'm here speaking to you again. This is the share structure. This is after the 3-for-1 forward stock split. As you can see, First Mining Gold, they changed their name, is the largest single shareholder, and Silver Standard, now SSR Mining, is the second largest shareholder. And key shareholders include a lot of the principals of First Majestic, First Mining Finance, etc. So let's talk about the Candelaria project. I will just say it's a past producer, produced over 68 million ounces. It started out as high-grade veins near surface, oxide veins. It produced on average between the mid-1800s and the late 1950s, an average grade of 1,200 grams per ton silver. It was the richest silver producer in the state of Nevada. And that changed, of course, when they went into open pit mining in the 70s, 80s, and 90s. First Occidental Nurco, and then that was followed by Kinross until '98. They essentially shut it down with the collapse in metal prices at that time, and they couldn't make a go of it at $2, $3, $4 silver. They put it into reclamation, and then Silver Standard came around in 2001, drilled off a large resource, and then they did some testing and decided they couldn't make it go at those prices, and they put it on their shelf for about 15 years until we came along and did a deal. What we like about it, that's what I just talked about, is the historic resource, now historic because anything more than 3 years old is considered historic by 43-101 regulations. But measured and indicated, 44 million ounces of silver just north of the Mount Diablo pit, and another inferred resources of another 83 million ounces of silver. What's important is in that are about just under 50 million ounces of silver in the old heaps at an average grade of 1.29 ounces per ton or 40 grams per ton. That's mined material sitting on the surface. The reason we find this intriguing is because the Coeur deposit of Rochester, or the Rochester deposit being mined by Coeur, northern Nevada, is producing at a head grade of 13 grams per ton silver. So we think there's a real opportunity here. This is just a shot taken from the top of the Northern Bell pit, looking at the big leach pad in the distance. You can see a building and a small the truck there for scale, so very large leach pad, about 36 million tons of material sitting there. This is just a map of it. You come in off the main highway that joins Vegas and Reno, Nevada. You come along a 2-mile paved road, go past the heaps to the 2 pits. There is power that is connected to water wells, and we have all of the infrastructure in place. So we want to proceed with that. We drilled it in December. We took multiple samples. We split them. We analyzed them. We've reconfirmed the average grade of those pits to be approximately 43 grams per ton. Preliminary MET testing, bottle roll tests, are suggesting that up to 53% of that material is cyanide leachable. So we think there's a real potential here, but we're doing the metallurgical testing, and that's going to take another couple of months. So the other opportunity is most of the drilling that was done by Silver Standard was just on the northern margin of the pits, but they hit numerous multiple high-grade intercepts greater than 300 grams per ton silver just north of the Diablo pit. Why is that important? Well, historically, this was the highest grade producer in Nevada. If you look, you'll see that, if I can get this to work, that's the pit. There's the resource, but way over here, we're getting 14 meters of 670 grams per ton silver. So we think there's an opportunity for a high-grade down-dip zone that's never been fully drilled off. On top of that, there are old historic workings here, here, and here that essentially we've tested, good silver values, but never really been drilled. Lots of potential to find additional mineralization. This is essentially the time frame that we want to meet. We have drilled the heaps, prepared the samples. We're about this far in the MET testing. If things work out, we'll do an economic study, proceed with permitting, and then hopefully get it into production on the heaps in about 2020. And from there, we will then decide to do additional exploration, and with that additional exploration, hopefully bring in some of the hard rock into the production system. Anyway, I'm running out of time, so I'm just going to say, why silver? I think we're on the cusp of another boom in precious metals. That's why I came back into the industry. Silver is undervalued. Essentially, if you believe in the gold-silver ratio, it's trading at around 80. Every time it hits that, it comes down. And on top of that, we've had numerous bubbles. Latest one could be a Bitcoin bubble, we don't know. And usually gold performs well just after one of those bubbles. What are some of the reasons for that? Well, we play around with the dollar index and the Dow Jones. It goes up and down. Inflation and debt are definitely going up. Usually that's good for gold and silver. And with 2 seconds left, I can drag this out and say thank you.